Markets are up today as the Dow Jones gained more than 200 points, while both the S&P 500 and Nasdaq were up roughly 1% each amid easing concerns about a banking crisis. Now, unless you've been living under a rock when it comes to markets, this has been all the rave recently with markets, people fearful of banks going under and collapsing. Michael Barr, the Federal Reserve's vice chairman for supervision, said that SVB, one of the notable banks that had a lot of trouble, the troubles were due to poor risk management, suggesting it could be an isolated case. Is this the true story, or is the Fed holding back on us? I don't know, but regardless, what we pay attention to here on the channel as traders is the momentum that we see in markets, and optimism seems to be surfacing when it comes to this banking crisis fear. Let's jump into the charts and see how that's impacting things like the dollar and the indices and gold market today. All right, guys, and welcome back to another technical video here where we jump into some trading setups and I go through what's impacting the markets today. If you enjoy my content, take a half second and remember to thumbs up the video, subscribe, and all those good things. So the dollar here, recently has been on sort of a downward trend. Now, there's been little pops here, and most of these pops, guys, have been off of fears around this banking situation. Outside of that, the market is expecting the Fed to pivot at some point and rate hikes to slow down or even stop altogether here in 2023. Why does that matter? Well, rate hikes, if you guys remember, were what drove the dollar absolutely parabolic in 2021 and 2022. The dollar would not stop because interest rates just kept climbing and climbing, and markets were forecasting 5.5%. Now we are currently sitting at 5%, but the market seems to be seeing inflation cooling down. And with that, the Federal Reserve has mentioned its sort of interest in potentially, squashing the inflation problem, but slowing down the need for rate hikes, especially with recent banking concerns. It's become increasingly likely that the Fed may need to slow their roll when it comes to rate hikes. Well, that's put a lot of downward pressure on the dollar. And recently the dollar has not been able to find any significant bids. Now, again, these pops, like I mentioned, are off the banking crisis. Without failure, both times that fears have surfaced again, the dollar has popped. But each time with consistent resiliency, the dollar has been sold into. So is this something to pay attention to? Well, I think if you're looking at the daily chart on the dollar, if we break through the lows, guys, that's going to trigger some bigger selling in the dollar. Now, what I mean is we're looking at the daily chart on the US dollar right now. And if we pay attention to this zone, you can see that this was a huge area in February where the dollar rallied strongly off of fears that inflation was going to run into a big problem again. The rate hikes would have to come back on. And then with the recent banking crisis stuff, that fear has really been, that concern has really changed directions, if you will. From a technical perspective, if the dollar is able to break through 101.5, I think we have more room to run to the downside. Now, what does this mean for us as traders? Well, if we're forecasting more dollar weakness going into the remainder of at least the next couple months, that could lean towards some bullish assets like gold continuing its upward move. We've talked about this a lot recently. We've been very bullish on gold, and we can actually go down to, I'll show you guys this real quick. Gold has been something we've been trading a lot recently and has been a consistent bullish signal on the edge finder. Things like the commitment of traders data showing that institutional money is very long. We have retail traders who are piling into short trades, which of course we know retail traders typically lose money. They're on the wrong side of lots of trades. It's unfortunate. It's just the reality of markets. We get a bullish indication for the month of March and the month of April. Historically speaking, we tend to see gold rise during these times. Trend is to the upside, all these good things. Overall, like I said, I am still bullish on the gold market going into the remainder of this month and going into next month. Now, here's something I'll show you guys. If we talk about the Discord, Frank and I have been trading gold a lot recently. We had a nice trade on gold last week, and then now going into this week, I've kind of missed some of the gold move, but Frank has been in on some of the gold action. And if you guys aren't already inside of the Discord, we're going to do something that we rarely do. We do not do this very often. We're going to be allowing people to check out the Discord today for free. If you want to check out the Discord, the full version, trading alerts, coaching webinars, chat rooms, everything that we have to offer, we are going to show you how you can do that. So all you have to do is at the top of the description down below, click this link that you see popping up on the screen. Click that link. It's going to take you to a prompt where you can have a conversation with one of my team members here at A1 Trading. If you'd like to join us today, just send them the word free Discord trial or Discord access, and someone from our team will get you hooked up to try out the platform itself and see what we're all about. We'd love to have more people join us and hope to meet some of you guys in there. So I like gold long. And I've been sort of on this this consistent high horse with gold. I really do want to be long, but I'm being stubborn. I'm waiting for price. If it does decide to give a little bit of a dip back down to 1935, I'm interested in a long position there based off the factors I just mentioned. Again, a little bit of dovishness, potentially the dollar looking a little bit weak, and I'm looking for that pullback play. Now, there's another trade that I mentioned recently. I'd like to see if it can break out through the highs. I'd also be interested in a pullback opportunity there. That's a little bit of a ways away though, so that's just something we'll come back to or revisit as we may need to. The S&P 500 is the other thing that could rally on continued dovishness from the Federal Reserve. Why? If they are worried about causing issues with the banking system, they're going to be very hesitant to raise rates. Well, as we mentioned, raising rates has been what's really caused the dollar to strengthen and has been a very negative catalyst for the S&P 500 for the last couple of years, really. Rate hikes, inflation problems, we've seen that over and over. But if we start to see the light in this tunnel, it's very possible that the S&P 500 could see continuation. Now, we're looking at a 4-hour chart here, and what you'll notice is that we've seen consistent lower highs and some struggle in this market recently. But what do we notice as of today? We have a breakout, right? We've seen these higher lows coming into this market, but again, it was in the context of an overall downward trend. So I didn't think too highly of it. But today we have breakouts. This is really, really big stuff for the S&P 500 bulls. Now, I love trading the S&P 500, and I've talked about this as my favorite asset to trade on the long side. And I'm not necessarily able to get bullish just yet. I've mentioned that I'd like to see a couple things fold to the bullish side. If you guys are, keeping tabs on the Edge Finder, if you have access to the Edge Finder, then you know we still have a -5 on the S&P 500. Still a sell bias here. It's mostly because a lot of the economic numbers are still a little bit shaky. We have high interest rates still. We have not seen a come off of those interest rates. If we get a rate cut, that might be attractive to the long side. Inflation numbers are coming down, which is a good thing for the S&P 500, as that fear could continue to cause the interest rates to possibly creep down, which again would be nice. In terms of GDP, right, we had a negative GDP quarter. If that changes, if we get a positive GDP quarter next, that could be positive for the stock market, right, showing the economy growing a little bit, that sort of thing. So we'll be paying attention to that and watching that close as we get that new data coming out. But for now, not quite ready in terms of trades. Now, I have one short open right now, the Australian dollar against the US dollar. And I am currently short on this. I mentioned this was a trading signal that I shared inside of that Discord, which remember, you can join us for today for free. Click that link down below in the description and chat with one of our support reps. That's what I'm paying attention to is the Australian dollar. I do actually like short. Why? If I'm bearish on the dollar, why am I short Australian dollar? Well, it's because mostly I am more bullish on the dollar than I am on the Aussie. So if we take a look at this breakdown real quick, well, first, technically, the chart looks pretty good to the downside. We have a downward trend, higher time frame. We saw a lot of rejection off the 67, 68. And then now, as price broke through this level of support, retested, I tried to get in here. I was a bit too early, I'm be honest, because price did rally against me, but my stop loss was above the 61.8% retracement, which keeps me in the trade here as we speak. So I'm back down to about break even on this trade, and my thought process is if we're able to get a rally, or I'm sorry, a sell-off back down beyond the previous lows, I'll be looking to trail stops on this trade and see if I can make some money on that. Why am I bearish AUD USD? Well, here's your breakdown. COT data favors the US dollar a lot over the Australian dollar. Retail traders are very long Aussie and short USD, which is of course interesting in this case. So retail sentiment points towards a bullish signal, right? If the crowd is short, we want to be long. If the crowd is long, we want to be short. At least that's how I like to view it. As I you know, we've known the stats, right? We know that the fact that retail traders tend to be on the wrong side of trades, they tend to lose money, that sort of thing. Trend reading is to the downside, pretty clear based on the technicals that I just showed you, and economic figures favor the US over Australia. So that's why I have a short trade on the Australian dollar. And again, if you, for those of you who are going to be trying out the Discord today, I took this trade a couple days back, 327, what is that, 2 days ago. So I risked 55 pips on this trade. I shared the full breakdown, and this is what you'll see once you join the Discord. You'll see the trades that we're taking, and more importantly, why we take them. We share full breakdowns. So while you're in here, I encourage you to go check out some of the trades, read through why we take the trades, read through some of the strategies and things that we're using, and then you could decide if you'd like to stick around with us. That's the whole point. We're looking for more serious members who'd like to sign up with us and become VIP members for the long term. If you speak with one of our support reps, they'll also have discounts available to you if you decide to stick around for the long term and join the community. Hey, guess what? I just found a video made just for you. Click this video to help with your trading, and thanks for watching.